Welcome back to Business Talk on businesstech.co.za, the show where we explore the big ideas, the bold innovations and the powerful trends that are reshaping business and finance. In today's episode, we're talking about one of the most important trends in the modern financial world, the shift away from cash. And we've seen the rise of digital alternatives, cards, ETFs, wearables, phones. Wherever you go, there seems to be a different payment method. And I sometimes wonder about interoperability and all of those things. But there's this growing conversation about the opportunities and the challenges in building a cashless society. So to help us unpack this, I'm joined by Nthabiseng Mohale, Manager of Interbank and Regulator Forums, and Stuart McDermid, Head of Product Solutions, both from transaction banking at Standard Bank CIB. Together, they're going to give us a deeper understanding of what sparked this cashless revolution and some of the emerging technologies shaping the future of payments. So great to have you both on the show. Maybe, Nthabiseng, you could just kick us off with the basics. There's been a massive trend away from cash in recent years. What do you think initially sparked this shift?
So I think we have noted the trend, but what we've noted is that the cash circulation has not actually increased since 2009, as per the data that we got from Stats SA. It actually reported that the financial institution, we haven't seen that decrease in cash circulation. And that in 2023, there were actually around about 171 billion cash in circulated reported. This, of course, it just shows us that even though there's a huge trend to try and move away from cash, we haven't seen that. And it just shows that there is still that so much that needs to be done. And, of course, even though we have the banknotes that are actually being utilized to perform multiple transactions, we are seeing that even though that has not decreased, there is a growth in the digital payments with card around about 7%. And there's a strong increase in terms of the utilization of PaySharp that we've seen since 2023 when it was actually launched. And what has actually sparked this was that there is benefits from the retailers as well as the corporates to reduce cash utilization into the system. And this relates to the cost that is associated with the utilization of cash in terms of processing. We also seen that there is a huge benefit if we then, divert the cash utilization to digital payments and we migrate those transactions that are currently being done today to the digital services. And we are saying that in that we need to create a market that is a bit more comfortable and a market that will support this migration or evolution of digital payments. And that will then, assist the industry in terms of this trend that we want to go in, even though we're not seeing that particular change in terms of the cash utilization in the system. But it's mainly around the cash cost in terms of processing and also to drive, this market to a more digital payments adoption and acceptance market. So that's what has actually then caused this particular trend to then start and to enable us to build systems and product that will then enable us to reach that digital payments.
Yeah, just to add to that so that we've got a, understanding of what we're talking about. So Nthabiseng is talking about the 170 odd billion. So that's physical cash, banknotes and coins, M1 in the market. And that's been growing steadily by a couple of % a year. I mean, we have seen potentially a flattening off over the last year and potentially again. The challenge is, of course, a banknote will stay in the market for a period of time and be used for numerous transactions. So what we are seeing is the increase in those digital transactions, to Nthabiseng's point, and to yours, this rise of wallets and wearables. I think what's really interesting about the rise of alternatives, many of them are really just a way of triggering a card transaction. So when you pay on your Garmin watch and your app and all of these clever technologies, Apple Pay, Samsung Pay, they're all going back to a card transaction. So that's helping drive that card growth that Nthabiseng is talking about. And we expect to see that continue. The trick really is to start replacing and the current estimate is that a banknote in circulation will do between 10 and 15 transactions before it gets handed over to a merchant, a Pick and Pay, a ShopRite, and then back into the system where it can be replaced by a new note. And the idea is really to get digital transactions in that space. And that's really the challenge we're seeing. We do still have a lot of people in the industry. They may get paid into a bank account, their salary. I mean, I think we've looked at the numbers. 80 to 95% of salaries are all paid to bank accounts. 60% of individuals draw up to half their salary immediately and then run it on cash. So that's the real holy grail that I think we're trying to solve with a number of initiatives.
Why is that? I know the Reserve Bank released a paper recently, and Tim Masela is doing some great work in trying to understand what some of the barriers are in shifting people off cash and onto cashless rails. Is it a trust issue? Is it a way of just breaking down a culture of this is always the way we've done things? Nthabiseng, I saw you nodding there when I said trust. Do you think that's one of the biggest obstacles that the industry needs to overcome?
A lot of consumers actually feel safe utilizing cash. And this is about control because they feel like they're in control. And we actually see a lot of consumers saying, if I utilize cash, I know how much I've spent. I know that there won't be any uninformed fees or bank fees that I'm being charged. They're also utilizing cash in the form of ensuring that they're not then victims of unauthorized debit orders. And it talks back to what Stuart was then saying, to say that most people that actually then get paid their salaries in a bank account, they will then take it out and utilize cash to transact into the system, because then they're in control to say, this is how much I've spent. There won't be anybody that is coming into my account and debiting my account to take my funds. It's also an example that I wanted to bring in to say, I've seen with my mother, she has an Uber app and she has her card linked to an Uber app. But every time she then requests an Uber ride, she actually pays it in cash. And for her is to say that she is then confirmed and certain that she will be paying a particular amount. Unlike when she utilizes her card, sometimes then the Uber will then cancel the transaction and then create a new transaction with a new amount. And that is not something that she's willing to then encounter because it takes her out of the budget. I also wanted just to add to say, even with the a study that was done by Stitch Money, it actually found that 25% of the people that they actually interviewed still utilize cash on a monthly basis, even though they actually got paid into their bank account. So it just brings in that people are more comfortable and safer and feel safe with the utilization of cash, unlike with the digital products.
Stuart, just to build on that, often it's just a perception of safety. And I mean, if you're drawing cash, the chances of being robbed or anything like that, I think are probably much higher than anything going wrong inside a virtual wallet, for example. That said, going cashless isn't without issues for society as a whole. What are the major challenges in this regard?
So I think when we look at going cashless, I mean, spot on, you're absolutely correct in that the real safety issues of cash are huge. We have a huge issue with crime in this country. In fact, we've seen some of our instant money vouchers. One of the most common usages was somebody was traveling. They'd send themselves an instant money voucher, travel on a taxi, and then go draw the cash at their destination so that they didn't have to have cash on them. But I think that perception is very strong. And I think it does go back to the legacy of, many years ago, there was a considerable amount of abuse of debit orders in the system. And that sort of behavior is, when by the time you've had a bounced debit order and then somebody charges you a fee and the bank doesn't refund it immediately, it was a real problem. And that's something that's only going to change over time. I think the true efficiencies of going cashless, when we start to actually pass those on to the consumer and the consumer starts to see the benefits, I think it'll start to happen. The current world of cash is still free from a transaction cost for the individual. So the individuals are happy to use it because the fees are picked up by the merchants. But those costs are built into prices of goods and services. So when people start migrating to cashless societies and they start to see those efficiencies, I think people are clever enough to actually grab that with both hands. There's a real benefit to that. So I see it changing. I think the there's a number of, I talk about there's a regulatory capability, a tech capability, and a market capability. So from a regulatory capability point of view, our regulators are very strong. I mean, you referred to Tim's paper earlier. The regulation in this country is really about opening up banking, going cashless. There's strong strategic drivers and changes in regulation happening. From a technical capability, I think we've seen, the card rails are strong. They work very, very well. There's a number of wallets. I think the interoperability question we can delve into just now, but that is real. But especially with the launch of something like PayShap. PayShap is a really, really modern, immediate generation payment that has many of the characteristics of cash. It's immediate, it's invisible, it's irreversible. So technically wise, we're just starting to get into the area where we have technical capability available. So we've got technical, we've got regulatory. It's really around the market, and that's around getting consumers to fit it into their lives in a way that's appropriate for them. And with that in mind, from the Standard Bank point of view, we work strongly with corporates. We partner with corporates and fintechs to create usable or really good usability experiences for those individuals on top of this new generation tech and regulation. And the adoption is going to be driven by merchants receiving payments in this way, incentivizations and things like that.
Yeah, absolutely. I was in Kenya recently and wanted to tip one of the guides in Mombasa, and I'm not in the M-Pesa ecosystem, and you only accepted M-Pesa. Whereas if you look at something like PayShap, it has much better interoperability. I know there was an issue, and Stuart, maybe if you can comment on this around the cost of PayShap in other markets. I think in Brazil and India, if I'm not mistaken, it is free. And so the initial critique was, well, why isn't PayShap free in South Africa? Can you maybe shed some light onto why that is the case?
Yeah, so I think what happened, and the typical examples that I've spoken about is, there's a number of African countries or other African countries, Brazil, India, where it has been made free. Now, what happened there that was different is the bank owns the public utility. So in South Africa, the utility bank server is owned by a number of shareholders, including the main banks. And the banks and the utility actually invested hundreds of millions of rands in buildings. So the huge cost of building PayShap, creating these systems, integrating to the other banks, creating this really, really modern payment rail has been carried by the banks. In other markets, it was paid by the government. So the government paid for these utilities, built the systems, did the investment, and then turned around and regulated to the market the cost structure. So we don't have that here. So we've got commercial players who've made considerable investments into this at the request of the SARB. So it's not going to be free at this point. That being said, I think the strategy driven by the SARB is heading in that direction. We're definitely seeing a race to lower pricing. PayShap specifically is quite new. It's been around for a year and a bit, and we're still, I guess, finding our feet. What happened in the other markets that I think will settle this is when PayShap becomes the dominant rail, which I have personally no doubt that it will, is you get a multiplier effect in transactions. So instead of it being, one transaction that was in the bank at one rate, and now you have to recover that revenue and that investment, you have to charge for it. As you start to work into the world of micro payments, and in India, we saw payments went up 20 times in volume over a couple of years. So that higher volume of micro payments actually starts to make this free. And I don't think necessarily free for everything. I think what we do need to do is really to stimulate the consumer with low value purchases. And that will come down to I think close to free. We'll see how that pans out. But PayShap, it will actually do transactions up to 5 million rand over a couple of years. So there's a lot of transactions, and I think that'll play out over time. What we've also seen from in a PayShap world is that corporates are actually prepared to pay for payments made to them. So the way regulation is at the moment is that the payer bank pays the receiving bank an interchange. So the PayShap pricing is paid by the payer. In the corporate world, you don't pay when you buy from a corporate. Whether you pay by debit order or cash or a credit card, the corporate always pays. So I think we need to relook at that model. And the conversations are happening, and I think it'll happen over time, on how we can get the corporate to subsidize those costs and bring them down for the individual. But that, I think, to your point, is probably one of the true unlocks that does need to happen to get adoption.
Yeah, but I think very important distinction between our markets and what you see in Brazil and India, in that the central bank in those markets does own the rails, in effect, whereas those rails are owned through BankServe and the big banks here. And ultimately, if you're building infrastructure, someone's got to pay for it. And as volume increases, to your point, the unit cost should come down. But nothing is ever free in society. There is still huge potential for this, Nthabiseng, in going cashless in society. So what talent are you going to be searching for to make this a success as Standard Bank CIB?
So for us to really go cashless, we need to firstly simplify the client journey in engaging with this digital payments, and making it easy for them to understand and know why they're utilizing them. You also need to find a talent that would have an understanding or context in the experience of the consumer, for them to then be able to be innovative in a way that when they deliver certain products that are innovative, that the clients can then engage with, they're simple. They have an understanding of why those products actually would then create value for those particular clients. So you're looking at a talent of new bankers in terms of the way they think, the way they deliver products, the way they engage with their clients, the way they design the client journeys, and how the client will actually then consume those particular products. So you're not looking for your traditional banker. You're looking for somebody who will think outside the box, but somebody who will understand who is actually the customer, and not think from a bank perspective, but think from a customer's lens and understand why the customer has to engage with that and how they will then engage with those particular products and service. So we completely need bankers that are for customers, that understand the customer's needs, that understand the customer journey, and then relate that into products and services that will then create the adoption for these digital services.
Stuart, just to wrap it up for us, what opportunities do you see on the horizon when you look at the evolution of the payments industry, and what are you tracking when it comes to cashless financial solutions that can hopefully also provide that incentive to greater adoption in the market?
Yeah, I think there's a number of aspects to that. So I think the SARB Vision 2025 and 2030, which is coming out, is really around how do they support, from a regulatory point of view, how do they support this opening up of the banking system, bringing in non-banks, fintechs, alternate service providers to be able to, I guess, open up the playing field and allow competition. And, not that I think banks aren't doing this, but I think the involvement of some of these specialized fintechs, to Nthabiseng's earlier point, is they're really good at creating niche value propositions. As a bank, we've got rails, we do high volume payments, and we'll solve specific problems for corporates and individuals. But allowing these fintechs to operate under the regulatory umbrella to create this value. And I think from a measurable point of view, the PayShop alone, the business case is looking at taking away sort of 3 out of 10 cash transactions, migrating them to electronic over a period of 5 years. We're looking at the growth in PayShop both as a multiplier of transactions and as a replacement of existing transaction rails. Obviously, when we get up to the targeted values of PayShop, we can bring efficiencies into the system by the decommissioning of real-time clearing, or RTC as it's known. So there's a number of technology kind of initiatives that will sort of step change business efficiency. Obviously, from a physical cash point of view, the more we can reduce that and pass the savings on to the individual, it's key. So like I think I touched on earlier, is that the growth in digital transactions is really supported by, obviously by banks, because we want to make the economy more efficient, but by corporates as well. And they just need to work out how to pass these savings on into their business. It's not about, corporate making more money. It's about how do you start to reduce prices for the end consumer. I think we read a stat the other day, and it was a 1% growth in electronic transactions can equate to 6.1% in GDP. So suddenly if you're getting 10% growth in digital transactions, you're getting those savings. This is the ability to pull levers, up to 1% growth in GDP. So that really, really becomes significant. What it also does, and these are the hidden gems behind digital, is instead of buying something by cash, if I buy it electronically, I now have a electronic record. I start to build up a history of payment. I start to become eligible for credit products and additional products and, further financial services to start growing small businesses and taking opportunities. So, so there's a number of significant levers that growth in digital will enable in the country. Yeah. And, we'll hopefully see them all.
And taking
Pesha product.
Absolutely. And Nthabiseng, yes, please add on to that, because what I like about what Stuart said was you taking those previously thin file customers, as they call them, and making them thick file customers. You've got the data to now extend more financial services, maybe bridging finance for a small business in a township, for example. That really is where the exciting bit lies for me.
Yes. And I actually wanted to add to say part of this is it's also about solving for government payments. And this is part of financial inclusion. And we see PayShap as being one of the services that is available to convert those cash payments that government is currently doing today in disbursements of those funds to then create those digital payments. And that will then bring people into the financial or digital products. And that will then relay in them utilizing those funds digitally with those small merchants or those small entities within the rural as well as the township economy. And that is how you will then drive that growth from cash into digital payments. And we've seen it with other markets as well, where government payments or government requirements were included as part of the use cases. That is actually solved by this new services that we're bringing. Because as you start there, you then creating financial inclusion, you're creating digital payment, you allow people to then spend digitally within the economy, both on the receiving side as well as the acceptance side.
Yeah, that really is the big lever on that flywheel. Yeah.
No, sorry, Michael. I just wanted to add to that. Because Nthabiseng and I both get very excited about this construct. So it's not just digital, it's about immediate as well. And one of the biggest, a credit card is digital, but you get money T plus, 1 to 2 days after settlement. And in some cases in the spaza shop, it can cost you 3%, right? Now that sort of changing that to immediate says that a spaza shop, when they run out of bread, they can, instead of having cash, they need to go put into an ATM or pay to a corporate to order more bread. They then have the ability to order bread immediately. The bread distributor will then send bread immediately because they've got an immediate payment. So that efficiency into the ecosystem ties into, I guess, the working capital cycle of these really, really small trading entities, enabling them to both build up that credit record with a supplier to get advances, but also to pay for goods immediately. If somebody needs 10 cases of beer in a shebeen on Friday before a long weekend, they're not going to get it unless they've paid or have a credit profile. And digital immediate payments can solve for both of those just to make their entire business more efficient. Try ordering beer on a Saturday if you don't have a credit line. It's not going to happen. So all of these, they just have such a kicker to the economy from a reduced working capital, immediate settlement, low cost credit profiles. It's really, really powerful.
Absolutely. And also why I think businesses need to your earlier point, as merchants, just think about how they contribute, how they bring their piece of the puzzle. But you mentioned, 10 to 15 transactions after that cash is withdrawn from a bank account. Imagine if you can build up the data on where people are spending, how they're spending, and to better service them and to offer them more relevant products and services as well. Very exciting. Well, that wraps up another thought-provoking episode of Business Talk with Nthabiseng Mohale and Stuart McDermid at Standard Bank CIB, sharing their great passion as we move towards a cashless society. Yes, some of the challenges remain, and we need to address the trust issue, but I think increasingly I'm getting excited for what a cashless payment ecosystem can deliver in a society that really needs to start thinking about servicing the underbanked, the underserved, the base of the pyramid, and to kickstart economic growth. Add 1% of GDP to South Africa right now, and all of a sudden we're on a whole lot more capital allocators' radar screens globally. So a very exciting conversation, sparking new thoughts and ideas here on Business Talk on Business Tech. Take care.